Hey everyone, and welcome back for another deep dive. Today, we're going to be, well, it's going to be kind of like a wild ride, I think, through all the latest financial headlines. It's been, I don't know about you, but for me, it's felt like a bit of a roller coaster out there.
Yeah, I'd agree with that.
We've got everything from like whispers of a huge bank profit boom coming up to, get this, Costco selling platinum bars now.
Platinum bars at Costco? Who would have thought?
Yeah, you heard that right. Platinum. It's like, what's next?
Right. The markets rarely stand still, do they?
Never a dull moment.
Yeah. It's easy to get, caught up in the daily whirlwind of financial news and trying to keep up with it all.
For sure.
But, that's why we're here, right? To try to cut through the noise and try to figure out what's really going on and kind of give you the insights that really matter. Exactly. So let's try to unpack some of this financial roller coaster we've been on, and maybe a good place to start is with those bank profits we were just talking about. Analysts are predicting like a potential surge in earnings by as early as 2025. Some are even saying this is like a turning point, especially for institutions like Charles Schwab.
Yeah.
Big name. What do you think? What's driving all this wave of optimism? Is it actually time to break out the party hats for banks?
Well, not so fast. I think it's important to understand that this anticipated upswing, at least that's what they're saying it is really closely tied to what they think the Federal Reserve is going to do with interest rates. They're predicting cuts. And, remember, banks have been, how have banks been doing the last 2 years? Not great.
Not great, no.
With earnings. I mean, part of it is because of those rising rates, right?
Yeah.
And we've all felt that.
Yeah.
I mean, so the thinking is as rates fall, then borrowing is going to become more attractive, and that should translate to a boost potentially for bank profits.
Yeah.
So that's kind of the thinking there.
Okay, so it's not just about the banks kind of raking it in. It could actually be signaling some broader kind of shifts in the economy as a whole, right?
Yeah, and I think that's a really good point. I mean, while this is just one piece of a very, very complex puzzle, it does, kind of give us a hint at maybe things easing up a little bit from these tight monetary policies we've been seeing. But, and this is a big but.
Always a but.
Well, this potential profit surge, right?
Yeah.
You have to keep in mind that could also incentivize banks to take on more risk.
Yeah.
I mean, it's that classic, potential rewards, potential risks, always kind of go together.
Yeah. Yeah, for sure. A delicate balancing act.
Absolutely.
Okay, well, let's shift gears a little bit from the financial sector and head over to, well, I guess we're going to the docks. We got to talk about that U.S. port strike. It ended up wrapping up pretty quickly, right? Only like 3 days.
Yeah, it was fast.
And you might think, well, short strike, no big deal, right? But it seems like there might be some stuff going on beneath the surface, some lingering ripples, especially for European shipping companies.
Yeah, and you're right. That short strike is actually a lot more significant than it might seem at first. And while there were definitely disruptions to the supply chains, kind of immediate disruptions, what has analysts really intrigued is what is the long-term impact going to be?
Okay.
Because European shipping firms, they missed out. They really missed out on a golden opportunity to kind of capture a larger share of global trade while the U.S. ports were, for all intents and purposes, frozen.
Yeah, that makes sense. Even kind of a blip on the radar can have some lasting consequences in this interconnected world of global trade that we live in.
Absolutely.
Okay, well, let's switch over to a topic that I think is always on everyone's minds, and that's jobs. And the latest report that just came out showed the U.S. economy added 254,000 jobs just last month, which is a lot of new paychecks being printed. It also seems like the bond market took notice because the 10-year Treasury yield went up just a bit. So can you kind of unpack that for us a little bit? What's the connection there?
Yeah, so that jump in the 10-year Treasury yield, it's a perfect example of how all these different economic indicators, they're not really separate. They're all kind of intertwined. So think of it like this. A strong jobs report like the one we just saw, that generally signals a pretty resilient economy.
Okay.
And when the economy is looking good, what do people start to get concerned about?
Exactly, inflation. And so when inflation fears start to kind of bubble up, investors, what they do is they often demand higher yields on bonds, things like the 10-year Treasury note. So that demand for higher yields is basically their way of protecting themselves against inflation, potentially kind of eroding their returns. So yeah, it's all connected.
It's like a whole financial ecosystem.
Exactly.
Where each part kind of influences all the others.
Yeah.
But I have to say, like, a strong jobs report seems like good news, right?
It does.
On the surface.
Yeah, absolutely. Job growth, that's what we want to see. It's generally seen as a really positive sign.
Right.
for the overall economy. However, and I know we always have these caveats.
We can't get too optimistic. We don't want to overinterpret things because this report could actually give the Fed even more reason to keep interest rates higher for a little bit longer.
Okay.
Just to kind of keep those inflationary pressures in check.
Okay.
So it's a bit of a, kind of a double-edged sword.
Yeah. Good news for workers, but maybe a little bit of a headache for policymakers.
Got it.
Okay. Well, let's dive into the fast-paced world of mergers and acquisitions for a second. It seems like one company's really shining right now, and another one's hitting a few bumps in the road. Kerr Mining is on a roll. They're acquiring Silvercrest Metals for, this is a lot of money, $1.7 billion.
Wow.
But then you've got Rivian, which has been kind of a darling in the electric vehicle space, and they're encountering some speed bumps. What's the story there?
Well, with Kerr, you're looking at, it's a great example of a company that's really using their strong stock performance strategically to fuel their expansion.
Yeah.
And what are they focused on? Precious metals, gold, silver.
Smart.
And this acquisition, it really aligns with that. It lets them get more assets in a sector they understand.
Yeah.
They know that world. But then you've got Rivian, and they're facing a challenge. And honestly, this is becoming more and more common these days, and that is supply chain problems.
Oh, right.
So even though they're on the cutting edge,
Yeah.
right, EV revolution, they're still feeling the squeeze from these parts shortages.
Yeah, it really goes to show you that even in this, this world of incredible tech and things happening so fast, sometimes those real world logistics can really, really trip things up.
Yeah, absolutely.
Speaking of tech, there's a lot of buzz, as always, kind of swirling around the Silicon Valley about, it seems like Cisco might be making a big move in the AI world.
Interesting.
Do you get that sense? What did they get their eye on?
Yeah, what we're seeing is a lot of these established tech giants, Cisco's been around forever, right?
Yeah.
And they're realizing, hey, we need a seat at the AI table.
Right.
And they're making, they're not afraid to make big moves to get there.
Right.
And so this potential investment in CoreWeave, which is, relatively young company in the AI startup world, but it's a prime example of that.
Yeah.
And what makes it even more interesting is CoreWeave's got these close ties to NVIDIA.
Right.
Which, if you know AI chips,
Right.
NVIDIA is a big player there.
Huge.
So that's one to watch.
And I saw the number at $23 billion valuation for CoreWeave.
Yeah, that's real money.
Yeah, they're in the game.
Yeah, it seems like everyone's trying to ride that AI wave right now.
Absolutely.
But, okay, before we get too lost in the metaverse, I do want to make sure we do a quick scan, kind of hit some other headlines that have been grabbing our attention.
Yeah, let's do it.
So fasten your seatbelts, folks, because it is rapid fire time.
Let's go.
All right, so we've got oil prices kind of freaking out a little bit after that Iranian missile attack. We've got a medical device recall that's got people talking. And even Real Housewives Mansion just hit the market. So a little something for everyone.
There you go. Yeah, it's a wild world out there.
It really is.
That's for sure. Okay, so first up, oil. It seems like every time there's some kind of flare-up, tensions in the Middle East, oil prices decide to go on their own little roller coaster ride.
Of course.
This time, it's Iran launching this missile. And I think the whole world is holding its breath a little bit to see how Israel might respond.
Yeah, it's a classic case of geopolitics and the global economy, and especially the energy market. They're just so closely tied together.
Yeah.
And even the hint of a supply disruption,
right.
can just send shockwaves through the system. And then that ends up hitting everything, from gas prices, obviously, that we all feel to, kind of the stability of the financial markets worldwide.
Yeah, it's a good reminder that what happens, even if it feels like it's on the other side of the world, it really can have a very real impact on, all of our wallets, all of our lives.
Absolutely.
Okay, speaking of things hitting close to home, medical device giant Medtronic, they just issued a voluntary recall on some of their insulin pumps.
Oh, wow.
Yeah, it seems like those batteries not quite as reliable as they need to be, so.
Yeah, and that's one of those, it raises these big questions, right?
Yeah.
About the safety of medical devices and the quality control, how rigorous are those processes? Because for people who rely on those insulin pumps, this is not just, I've got to go back to the store and, return something. This is,
It's their life.
It's a life or death thing.
Yeah.
So it really underscores how important it is to, have ongoing vigilance in that industry.
Yeah.
And really make sure those safety standards are as high as they can possibly be.
Yeah, absolutely. Those devices are literally lifelines for people.
For sure.
Okay, well, let's go from life-saving devices to, well, let's just call them lifestyle choices for a minute.
Okay. Right.
So the chairman of JD Wetherspoon, which for our listeners who might not know, it's a really popular pub chain over in the UK.
I've heard of it, yeah.
Yeah, well, he's raising some eyebrows with these concerns that he has about changing drinking habits.
Oh, interesting.
Yeah, it seems like, the Brits aren't quite hitting the pub for their pints like they used to. And he's pointing the finger at those government campaigns that have been encouraging people to, cut back a little bit on the alcohol.
Well, it is interesting how those things, I guess, habits that seem like they're so ingrained can actually shift over time.
Yeah.
And it just shows you it's not just one thing, right?
Right.
It's public health, it's the economy, it's just, social norms kind of evolving, and it all plays into, how people behave, what they're buying.
Yeah. Maybe they just need to start offering a platinum bar with every pint.
There you go. There's the solution.
That's right. Speaking of which, before we move on, I did want to touch on that Real Housewives mansion that just hit the market.
Oh, really? How much?
Only if you've got a spare $4.5 million lying around.
Oh, okay.
You too can live like you're on reality TV.
Wow, that's, it's always interesting to me to see that intersection of, pop culture and real estate.
Yeah.
I mean, you're getting a glimpse into these lifestyles, right?
Oh, yeah.
That are, they're a little over the top for most of us.
A little bit, yeah.
But it's no surprise that people would want to buy a little piece of that fantasy.
Right.
Assuming you've got a spare $4.5 million.
Exactly. Talk about a reality check.
Right.
Okay, let's swing back over to Wall Street just for a moment.
Okay.
It seems like the U.S. stock market has been kind of playing catch up with the rest of the world lately.
Yeah, it has.
What's the deal with that? I've heard some experts saying, no, America's about to make a big comeback, but...
Well, there's a few things going on there, right? So, international markets have been doing really well. The dollar has been strong, which actually can work against the U.S. market in some ways.
Oh, okay.
And then you've got these ongoing concerns about inflation and what the Fed's going to do with interest rates.
Right.
So all that's kind of contributed to Wall Street lagging a little bit.
Okay.
But you're right. There is a sense that maybe the U.S. is about to turn a corner here.
Okay.
And we might see a resurgence. So we'll see.
Interesting. But then you've got the Bank of America investor sentiment gauge, and that's painting a slightly different picture, doesn't it?
Yeah, well, see, that's the thing, is like market sentiment.
It's fickle.
It's like, it really is, it's like trying to predict the weather sometimes.
Yeah.
You never know.
Yeah.
So that particular gauge, it is suggesting that there's a lot of kind of bullish sentiment out there, but we always got to remember that's just one data point.
Right.
In an ocean of information.
It really is. It's kind of like you need a crystal ball half the time just to kind of...
Right. And who knows, maybe Costco will start selling those next.
There you go. You heard it here first. But, okay, speaking of things that are a little hard to get a read on, let's talk about housing for a minute. Mortgage rates actually went down a little bit recently, which you think would be good news for anybody trying to buy a house, but it doesn't seem like the market's really playing along just yet. What's going on there?
Yeah, it's not quite as simple as, lower mortgage rates, everybody jump back into the market. There's a lot of other things at play. Inventory, for one. There's just not a lot of houses on the market in a lot of places, and that keeps those prices up.
Yeah, it's that supply and demand thing.
Exactly. And then the other thing, let's be honest, it's affordability. Even with the rates ticking down a little bit, Fannie Mae, their chief economist, actually, they were talking about how wages just aren't keeping up.
Yeah, that's a big one.
So people, they're just not seeing those paychecks go up enough to be able to afford these house prices, even with a little bit of help from the mortgage rates. So
it's just this like, I don't know, frustrating combination of not enough houses. And then even if you could find a house, a lot of people, it's like, well, can we even afford it?
Right, exactly.
It's enough to make you want to just say, forget it, I'm buying a platinum bar instead. Speaking of...
Oh, here we go.
I told you we'd circle back to this. Costco is selling platinum bars now.
Only Costco.
Yeah, right. Along with their gold bars, which I guess they've been doing for a while, and I didn't even know that.
See, I told you, you gotta keep up.
I know. It's, but it just goes to show you, they're always thinking.
They are. Although I do have to say, precious metals, yeah, they can be part of a diversified portfolio.
Right.
But you got to be careful.
Of course.
They're not, some magical...
get-rich-quick scheme.
Exactly. And their value can go up and down just like anything else.
For sure. Well, I think that's a really important point to end on. I mean, we've covered a lot of ground today. We've gone from whispers of, this bank profit boom to the crazy housing market, and then of course we had to end on Costco selling platinum bars.
It's a wild world out there.
It really is. And the financial landscape, it never sits still, does it?
Never a dull moment.
Never a dull moment.
Yeah.
So, I guess as you go about your day today, think about what headlines are kind of grabbing your attention out there, and more importantly, what are you going to do about it? What moves are you going to make for your own financial future?
Those are the questions.
Those are the questions. And on that note, we'll leave it there. Until next time, keep learning, keep exploring, and thanks for joining us for another deep dive.